Good morning. I'm David Talbot, Managing Director and Head of Research here at Red Cloud Securities. Our next speaker today is Daniel Major. He's CEO of GoviEx Uranium. Now, GoviEx is advancing its Manuela development project in Niger, Matanga in Zambia, and Falea exploration project in Mali. Daniel, you will have 15 minutes to present, and then we'll have a 5-minute Q&A session right at the end. Okay, so take it away, sir.
Thank you very much, David, and thank you for the intro. And yes, GoviEx is an African-focused development company. We are targeting moving our projects forward in a different company, and for some reason, my slide presentation has suddenly decided to stop moving despite being tested earlier. We have 3 projects. 2 of them are fully mine permitted in the case of Manuela and our project Matanga in Zambia. We've done a lot of work on focusing on getting our projects simplified and moving them towards their final feasibility studies. We have a lot of exploration upside. We still have one of the largest mineral resources out there, but we also have a lot of ground on our properties that has never been explored. And certainly this very much applies to Falea, which is now very much an exploration play. We are Africa focused. We're very comfortable being in Africa. These are all mining jurisdictions. And I certainly think, one of the benefits of being in Africa is they are very GDP focused for commodities. These are governments that want mines to be built. In Manuela, many times I've commented it's, 4 to 6 months to get a permit. You don't worry about government changes as you do in Australia. The governments are looking for long-term development to secure. You've had long histories of producing uranium in these countries, particularly in Namibia and Niger. So this is all part of what you would expect for development of mining projects in general. And Africa has one of the highest growth rates in the world. So a lot of investment pouring into Africa. So I see Africa very much at the forward play. As we go through this market, a lot of the talk last year and increasingly this year is diversification of supply. Where do the new projects come from? And Africa certainly represents, I think, some of the very first projects that can come off the taxi rank to start supplying the market going forward. I'll briefly touch on the supply and demand because you will have seen other presentations, but the fundamentals remain very good no matter the issues that are out there at the moment. And, we obviously have to have in our mind what's going on in Ukraine and certainly have them in our thoughts and, wish them the best of what's going on. But the fundamentals remain very solid, strong demand, increasing push towards nuclear by governments realizing that, it has to be part of the green. I think what's being highlighted here as well, increasingly in recent events, is there are other commodities associated with energy that have restrictions, whether it's gas, oil, or even the commodities that are required for renewables are being restricted. And this, again, supports where nuclear can go as a development process. At the same time, we don't see any new projects getting built at the moment. We need them. We have an issue going forward where existing older projects will start to unwind. We've seen Cameco recently slowing down the rate at Cigar Lake to try and keep it open longer so they can try and figure out what to do with it when it reaches to the end. Even Kazatomprom, in its recent presentations at the NEI, highlighting that as we go into the next decade, the supply from their projects falls off unless they can start bringing new projects on. But the economics of those are nothing like the economics of the projects we've got now. And from the other side of it, the utilities are starting to realize this. We're starting to see more RFPs. We're seeing companies that were historically spot buyers pushing back into the RFP market to secure material and guarantee where it's coming from. So GoviEx very much targeting to be a developer, focus initially on getting Manuela going, then Matanga, and then we'll see where Falea fits into that as we advance our exploration. Manuela, as many of you probably know, and for those that don't, we're right up in the Sahara Desert, right next to the towns of Akukan and Arlet, which were built by Areva back in the early 70s to support the Cominac and Somaïr mines. Cominac has subsequently closed last year in March. We start with an open pit operation, our Miriam deposit, and then move to the very flat-lying room and pillar operations at M&M and MSNE. The infrastructure's there, the road, the power, and importantly, water. But the key for this, fully mine permitted, full environmental permitting in place, a government that's very keen to see development. The government is a 20% shareholder here. They've got a 10% free carry. That's part of the mining code of Niger and has been like that since it started. And we're under the 2006 mining code. The current project, the numbers are here. I won't go through them now. We're currently focused on simplifying that even more than we did under the PFS. The PFS that we did in February last year, so it's relatively new, you know, was to simplify the project, focus it for debt market. And we're really well underway now. We're targeting an FS by the end of the second quarter. Given its short time frame, you know, inflation is a factor, but it's very recent that we put out a new one, so we're able to do that. But we're engineers. Our job is very much to find ways of offsetting inflation, and I'm feeling very comfortable at the moment about where we are. We will obviously wait to see what the final result looks like, but certainly on target for that completion. And when that's done, our team is already, we're out there talking to the utilities. We're already part of the RFP process that's going on. But once we've got that feasibility, obviously we're in a stronger position to sit down and negotiate those off-term contracts. We brought Endeavour onto the team last year as well, Endeavour Financial, to help structure our debt. They're very much working with us. We've already appointed, or in the process of appointing, the independent engineers. You know, it's important on these projects to make sure that the auditing engineers are comfortable that you don't produce something that is not bankable. Make sure that you've covered off the red flags well before. So we're taking a very pragmatic approach to this. As I say, if we get that as we plan in June, the FS out of the way, by the end of the year, early into next year, we'd be looking to get the financing sorted out. And obviously the current uranium price in the market is going to be helping us do that. And then we'd be looking for production around the beginning of 2025, and then going on from there. We then have the Matanga project. That is right down by Lake Kariba. This is fully mine permitted as well. We actually combine two mine permitted projects. Very different to Manuela. It's got good infrastructure though. It's got power around, plenty of water. It's three projects combined together to give it that scale. We're looking at a very simple heap leaching operation here, being innovative, where we have a centralized heap leach and mobile heap leaches effectively, insofar as that the two different smaller heap leaches will be done for the Dibwe and Niamey projects, but we'll move the IX plant that goes with them. So trying to keep the cost down, being innovative in the way we're going. We put out the PEA for this back in 2017. The reason it was a PEA, because after Denison acquired it and got it permitted, they then expanded it by adding the Dibwe East deposit. That was all added as an inferred. It's about 45% of the project. We started drilling that last year to show that it could go to indicated relatively straightforward. Those results look really good. We'll finish that work this year, do the hydro work, the geotech, and start continuing the test work for the heap leach. All part of the strategy to make sure that by the end of this year, we've done most of the big key work for the field work, so that next year can be the engineering design to move Matanga on. We had 100% of this one, so it's very much our story. It's a very simple, straightforward project. And like Manuela, a lot of exploration upside to expand it as we go forward. And then lastly, Falea has a long history as a uranium project. The uranium is flat-lying sandstones between the Birimian and the dolerites. Very structural, so the solutions have come up the faults and then gone into these permeable sandstones. But it's an interesting one because it's got copper and silver in it. It's also interesting as it's on two big gold structures as well, the Sibayaya West and Sibayaya Babanka trends. We did work on gold last year and the year before, but we did a lot of work last year on IP. And what we can clearly see here is that we are sitting on a top of a very big IP target right underneath the uranium deposit. It's structurally aligned with the road fault. It's also structurally aligned with the banker trend as well. We've done some work at the beginning of this year, just analyzing old core from the past that went down into it, and those that we've received back and we reported along the road fault are reporting gold up to 4.5 grams a ton. And certainly those on the other trend, as this hole on the image shows, are rich in copper. So we are now currently drilling it. Geologically, looks really interesting. Haven't got any results, and when we do, we will issue those results to the market so they can see where that one goes. We'll decide strategically what to do with it once we know what it is. We've been building out our team as well and getting that ready. We structured our board as well last year, very much to move it into a development phase company. Sorry. We ended the year well cashed up as well. Moving forward into this year, obviously our momentum is meaning we're doing more in the field, but we're feeling very comfortable to do that as the market gets stronger going forward. Sorry. And then really from the value point of view, and I put this slide up previously, it is very much about getting from being a developer to being a producer, that re-rate, and particularly in our case, because once we show we can do it once, unlike many of my peers, I have a second project already in the pipeline and the ability to expand out those projects as well. And GoviEx continues to be at a discount to its peers. And don't forget, in the previous cycles, the M&A cycle is very much part of it. And Africa has always been a large part of that M&A cycle during the uranium market. So finally, just to round out, we are very positive about the uranium market, increasingly so, and the tightness of supply, the diversification requirements. Africa is very much a place to be working in uranium. You know, we've seen Australia, where a Labor government changes in Western Australia, and suddenly most of the uranium mines have had to stop, or projects have had to stop. A lot of exploration upside. We are permitted, very focused on being a development company and getting our projects ready to leverage into this cycle. Thank you very much.
Great. Thank you very much, Daniel. Great presentation. So let's kick off the Q&A session now. We do have a couple of questions. Daniel, looking at your management and technical teams, now that you're moving into production and feasibility as second project, do you plan to expand your staff at all? And who might you need?
Oh, absolutely. You know, part of the strategy is always, but we've used consultants predominantly simply because you never know where the market's going to be and you don't want to take on commitments. The plan will be to certainly build it out in two areas. One, obviously, to put a small but centralized office. I need a COO. My background is technical, so I'm able to cover all of that at the moment. But as we get bigger, I have to spread my time across other areas, and we need that support. And then obviously in country, we need to start to build out the in-country team as well. But you know, the trigger for that, David, is very much the FS. You know, you don't want to be putting people on the book spending money until you're very sure that what you're going to be doing it for, and making sure the numbers work. And you've got the whole of the debt review side time to get yourself ready. And we're already thinking about that and where to do it and how to do it. And you know, one of the benefits being in this year where projects are closing down, and some may probably close down at the end of the decade, you know, there's people available and people already sending us their CVs.
Yeah, we'll get to Orano in a second, but how about on the uranium marketing side? Is that something you're giving more attention to as well?
Oh gosh, you know, we in April last year appointed Chris Lewis. I mean, Chris has got, and you've spoken to him, I know, he's got 30 years of experience. I mean, he started at BHP, then he was at Cameco, and then he was at Uranium One. You know, Chris knows everybody in the uranium market from his time in it. So he is engaged full time on that, in that process, and talking to them, you know, until, and with him there, you know, we can get the contracting side done. The next step for us on that will be down to logistics, but you know, you don't need to worry about the logistics side until you're ready to start shipping it. You know, we're obviously worrying about it and costing it from an FS point of view, but you know, once we start shipping it, you'll need the people to make sure that we're doing things right.
Yeah, and speaking of shipping it, you know, it looks like Orano in country is very eager to get its hands on uranium ore. Is this a possibility or an option for GoviEx?
We have engaged with Orano for the last 2 to 3 years on this issue. One of the issues we have at Manuela, though, is we have molybdenum in our deposit. Their plant can't handle molybdenum, so they would have to put a fairly substantial extension onto it to be able to do it. They, at the moment, suppress the molybdenum that they've got and dump it out. It's 10% of our revenue stream. And if you went on their heap leach, they only get a 65% recovery on the heap leach. So it's like, why bother putting it on there? Why bother mining it all out just to throw half of it into the heap?
Right. Okay. Looking at Manuela, do you expect any cost savings being worked into the feasibility study? Perhaps additional resources, different elements? What should we expect for this upcoming study?
Don't expect the resources to change because I'm not drilling anything for that. So that's one part that won't be there. But what you will do is, as I said in the presentation, I'm an engineer. I spend a lot of time going back through everything. And a very key part of what we do under the FS is trade-offs on everything that we do. Whether we're going to do SDU versus ADU on the final product. We go through that whole process to say, right, what is the cheapest option? Go back through the mine design and say, well, how can we change the mine design to reduce the stripping ratio? What can we do to reduce that? Comminution, other alternatives, ways of changing the comminution line that we're going through. So a lot of what we did, the first part of the PFS was just simplify the process and say, that's the process we're going to have. We did that on purpose so that when we came to the FS, we could say the block's not changing, but how can we do it better? And certainly where we are today, I'm comfortable with the results coming through, but until I have seen the whole jigsaw, I don't know what the answer is.
Right. Okay. Now Matanga, I believe that's fully permitted as well. You're bringing it forward towards production and feasibility study. It looks like it's going to be tucked in after Manuela. Are there any synergies between these two projects? I know they're a fair ways away. They're in different countries.
Yeah, no, there's no direct synergies. I mean, the benefit for us, of course, is that, what we learn on Manuela is fully transferable. And and we're doing that with a lot of things like the ESG stuff that we do, etc. We're able to just duplicate across all of the properties. I'm now using staff in different countries and moving them around as well. So particularly when we're doing things like safety stuff, if I've got a drilled crew in one place, I send the safety guy over there, and when that drill crew finishes, he moves to the next drill site and transfers his skills onto the teams. The other area that will very much at me is, of course, Chris Lewis and his selling of uranium. When you start, you have to sell from the single asset you've got. Once the second asset goes, you can sell from either, and you therefore diversifying your risk for the utilities as well. So they become more comfortable because at least they know you're going to be able to provide the material because you've got two assets in production, not one.
Right. Okay. And Filet and Molly, sorry.
Yep.
This is one of your projects that you're spending exploration dollars on this year. Can you maybe tell us a little bit how that deposit is evolving here with the polymetallic mineralization?
The answer to that question is I'll tell you when we finish drilling it. But what was clear, and is very clear from the geology, is that something has been feeding the uranium into this thing. I mean, so you're used to sort of the Cameco Athabasca style. I mean, one of the things we're finding is graphite in the core, which is very much what you see in the Athabasca. So you're used to the mineralization coming up from deep down, getting into a permeable area. But the question is, where did it come? And you've seen that already in the Athabasca, the way people are drilling now. They're going down below the unconformity to find the uranium deposits. And so think about it that way, which is, everything's come up this fault. The juices are down there. Some metals move more than others. I mean, uranium is very mobile, but that doesn't mean that there are other metals are not still sitting down there. And certainly that IP is saying there's something down here you've got to come and have a look at. Is that just a copper gold, or is that actually a uranium deposit that's sitting underneath as well? And until we've completed the drilling and assessed what it is, we'll then make that call. I mean, as Govin points out to me, there is one very large copper uranium deposit sitting out there, and this has got all the similar signs of an ISOG. Do I say it's similar to the one in Australia? No, but certainly the signature is similar, and how it plays out, we'll see from the drilling.
Excellent. Okay. Well, thank you very much, Daniel. I appreciate everybody joining us this morning. Up next, we have Cordoba Minerals on Stream 1 and Blue Thunder Mining on Stream 2. Thank you, Daniel.
Thank you very much.